let's talk about stocks and what it takes. Topic is why you shouldn't trade stocks unless you accept this. The number one thing is the time commitment is not optional. You have to, you know, stick to your first 30 or 90 minutes of the market. You can't be saying like, oh, I'll just check the market whenever I have time. I've done that, and you gotta just stick to consistency. If you miss it, your system may have zero edge. You um you're not trading when you want, you're trading when market allows opportunity. So that's also important. Just because you're available to trade doesn't mean you should trade. And so in the beginning, you are not learning, you are paying tuition. Your $3,000 K idea is solid, frame properly. This is not a capital, this is not education cost. You could also do simulated money. That's also, instead of risking real money, which I've done to kind of learn how to think about money differently. But I mean, I should have just probably went with the simulation. What beginners don't realize, you will lose money while doing everything right. Early losses are not failure, they are data collection. Your brain will sabotage you, guaranteed. No one expects this part. You will experience fear, hope, boredom, regret. There are names for these: revenge trading, FOMO, overtrading, regret trading. You need a repeatable edge, not random wins. Most beginners misunderstand this. Winning trades does not equal your edge. You need a setup that produces positive expected value over many trades. This means same setup, same rules, same execution, measured over same sample size, 50 to 100 trades. You will be bored most of the time. This is one of the biggest hidden truths. Reality: 90% of the time, no trade. 10% of the time, some opportunity. If you can't sit still, you will miss manufactured trades. That's where accounts die, and that's where I struggle, sitting still. Number 6, your strategy must match your life. You said time, asset, style, time of day. This is correct. Add this: if your lifestyle doesn't match your strategy, you will fail. Examples: can't wake up early, opening strategy won't work. Working Uber, need to find windows. Can't focus long, scalping may backfire. So I do Uber, that's why I put in a prompt and it's helping me sharpen it. So 7, risk management isn't the only real edge. Er, um, is the only real edge. Early, most beginners focus on entries, but survival comes from position sizing, daily loss limits, no blowing up. Your rule: 1% per trade, 2% per day. This is actually professional level discipline. You don't become profitable by winning big. You become profitable by not losing big. So 1%, 2% is actually still too high for me. I go more with like 0.5% or less. But I might change that now that I'm gonna give my stocks more room to move, or more breathing room for it to work. Uh, I'll have less stop outs. The first year equals pattern recognition phase. I mean, what I said about less stop outs, I still got to test that out, so who knows. All right, the first year equals pattern recognition phase. So you learn all these things. What people don't realize, you are training your brain to see structure. Like baseball, you don't think mid-swing, you react from repetition. Trading is the same. Break, retest, hold. Your system needs to become automatic. Journaling isn't optional, it's the whole game. Most people journal wrong. Not, I made money, lost money. Instead, did I follow my rules? Was the setup valid? Did I exit correctly? What was the mistake category? You're building a feedback loop system. 10. You will question everything. At some point, your system stops working temporarily, you hit a losing streak, and your brain says, this doesn't work, but the truth is, you don't yet have enough data. Most people quit right before their edge becomes clear. The harsh truth, strong ending for your video. Well, this is the video I'm making. If you're not willing to wake up consistently, sit through boredom, follow rules under pressure, lose money while learning, track your behavior honestly, then you're not trading, you're gambling. And then 12, closing line. The market doesn't reward effort, it rewards execution under rules. Execution under rules. So that's, if you're not willing to, follow rules, that's probably the most, important thing. If you follow your rules, then you eventually get somewhere because you learn what didn't work, you change the rule to something that does work or it's consistent, and you, after like probably hundreds of reiterations of your system, improving it, refining it, narrowing it down to what you really want to trade and like trading, then that's when you start seeing better results. I would hope so. All right, bye-bye.